Hello, everybody. It's the 12th of Feb. I think today's Thursday. Yep, today is Thursday. We had some news, nothing major. Market open right now. So I'm on the 30-minute. Yes, I'll just grab an arrow and we're going to, I'm just going to do the same thing I do all the time, which is based on my model, is I'm going to wait 30 to 40 minutes to get some direction. Okay, so the first thing I need is direction. I'm going to sort of watch the charts on the 5 minutes while that happens, and I'll come back to you in the next 30, 40 minutes. So I'll see you then. Okay, so it's 10 a.m. So we've done our 30 minutes, got very clear direction. So this is just in session AM. What we need is a confirmed swing low. We've got a confirmed swing high. We just need a confirmed swing low and a retracement. So nice, simple retracement. We do not have any fair value gaps. We have one right here, but that's quite deep. We do have one potentially here, but it's hidden uh, between these weeks. So I'll consider that. So this is just a rough idea here. Okay, so anyway, just a rough placement. We don't have a swing low. So we need a swing low first, then we need retracement. So we have our direction. So we've got step one of the two-step model that I use. There's only three steps. Step two is to identify the fair value gap. We don't have any obvious fair value gap here. So we have a hidden one, which is not so obvious. So we will use that as a reference. And step three will just be to align that with a fib. So I'll do that now, and then I'll adjust it as time goes by. That may not be the low, but I'm just going to use it for now. So here we go. Yeah, so if we get in here, we'll be overlapping with the 60 and also with the 70. So this is the 5 minutes. By the way, if I zoom out a little bit, you can see we have a much larger potential two-step, right? So same model, but just this is not in session, this is across two different sessions, right? From yesterday, we have this high and this low. And then what do we have here? A retracement. Where is it going? Into this fair value gap. 5 minutes, right? It's going into that fair value gap. And then all we're doing is if you run this high to this low, the fib, you can see that that overlaps with the 70 as well. So same model, but this is across the sessions, right? This is a much bigger thing. So this is not something I would recommend doing, especially if you're doing like prop accounts, because you have to close your trade at the end of the day, blah, 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 trading stop losses, etc. Preferably just focus on in session, but that's there. So I'm aware of the bigger picture, but I'm also using the in session New York AM session as still my initial frame of reference. Okay, so I mean, that's the two-step. We've done step one, we've done step two, and we've partially done step three. We're just waiting for that low to be confirmed. Okay, once all that is done, the rest is experience, right? So, do you have fair value gap supporting price? So, do you see rejection there? It could be a rejection, any kind of rejection. And then what we do is just take a measured move, right? So 100% of this leg, this high and this low. Once it's confirmed, it's not confirmed yet. So that's what I'm going to do next. I'm just going to go away. Once it happens, I will come back, right? So see you guys soon. All right, guys, it's 10:15. Just to say we've got a confirmed low. Oh, I have no idea where my arrow is. Oh, it's right there. Yeah, so we do have a confirmed low right here. So all I'm waiting for is a retracement into this yellow box. So my 5 minutes fair value gaps are always yellow. Anywhere in this sort of zone, it could be low, mid, extreme. I'm looking for a rejection. Okay, so that can be on any time frame: 5 minutes, 4 minutes, 3 minutes, 2 minutes, 1 minute. I'm looking for a clean, clear rejection. Then I'll be looking to, if it gets here, because it's this deep, I will put my stop loss above the 100 initially. When price moves a little bit away, I will then move it to the sort of swing high. Okay, so that's what I'm going to do next. So once it all happens, I'll come back to you. All right, I'll see you in a moment. All right, guys, sorry, I missed something. I've just seen this 5 minute IFVG, so I'm just going to update that. All right, so yeah, so just to let you know, so I'm looking for a rejection, this fair value gap or this fair value gap, and I need a clean rejection. Once I see that, I will then consider my kind of next move. All right, see you in a moment. All right, guys, it's 10:35. This one's running away. It didn't pull back enough, so the trade wasn't on the 5 minutes, right? So the trade was actually on the 15 minutes. I'm watching the 15 minutes, the 1 minute, and of course the 5 minutes. Now, the reason I don't take the trades off the 15 minutes or the 1 minute, I've explained this in other videos, is for consistency. All right. I can't build my sort of muscle memory by always hopping time frames. Some people can, I just cannot do that. So I always use the 5 minutes. Everything is based on the 5 minutes. This is just to like I said, improve my muscle memory. Um, so yes, you will find trades on other time frames. For instance, today it's the 15 minutes. A couple of other times it's been the 1 minute. Um, and sometimes even the 3 minutes. But this is the sacrifice for me. I have to be consistent, so I only ever take the trades of the 5 minutes. If the 5 minutes doesn't work, I just let the trade go. Why? I can come back tomorrow and repeat the same steps. I can come back the next week and repeat exactly the same steps. So just to summarize, it doesn't look like we'll be taking any trades. I don't think I'll be taking any trades today. We'll come back tomorrow just because price is running, and I'm not chasing price at all. That's not part of the model. It's not designed to chase price. It's always designed to get in only on a retracement, this specific model. So, summarize, it's the two-step model. It's my model. I used to call it the fib model um, a while back. So if you watch older videos, you hear me say the fib model. But it's the two-step model, and it has 3 steps in it. First one is just to find the direction. Second one was to identify the fair value gap. As you can tell today, no clear 5 minute fair value gaps. And the third is the overlap, right, between the fair value gaps and the fibs. That's the model. The rest is just my experience, right? Your experience deciding when to take the entry inside the fair value gap, right? This is after you've seen support and then you've seen a rejection. We did not have that on the 5 minutes. We did have it on the 15 minutes. So just a quick one. We'll go to 15 minutes, watching the 15 minutes. So on the 15 minutes, I was watching this fair value gap right here. All right, this one right here. All right. So as soon as price got in there, you can see it rejected offset. So I'm just going to use the 15-minute fair value gap then. All right, I'll get this out the way. As you can see, it's the same high, low, retracement into the fair value gap. Watch the 1 minute. You get a clean rejection of that on the 1 minute. I just double check, right? So you get your, your breakers, your head and shoulders, all that kind of stuff, right? You have a nice little head and shoulders there that broke out, and you would be looking for a measured move. So I'm sure we've already hit the target actually. Let's do that. And then you grab that there. Yeah, we've already hit it. So you can see how we've already hit what would have been a nice trade for us on the 5 minutes, but it turned out to be on 15 minutes. There is a much larger two-step, by the way. Um, that I'm dealing on a separate account. This is not. This is mostly prop stuff, so I just focus on a repeatable operational model. But there you have it, guys. That's the video today. So no specific trade regarding this model on the 5 minutes today. Uh, maybe we have more luck tomorrow. So I'll see you guys in the next video.